we will try to understand the rates of taxation, because whenever we do questions in PGBP or capital gains, we might also work out the tax. Having said, every chapter we will again look into. When I am teaching you companies, I will again look into rates of taxation. When we teach firm, we will also look into rates of taxation. So it is just a bird's eye view, that is we are starting today and working. It will go on. There are two regimes of taxation. One is popularly known as old tax regime, though I want to call it as a normal tax regime. And the other is popularly known as new tax regime, which is nothing but the concessional tax regimes. Which is nothing but the concessional tax regimes. Okay, new tax regime, which is nothing but concessional tax regime. If the assessee is silent, then he will fall under new tax regime. Previously, 2 years back, new tax regime should be chosen by the assessee. He should opt for new tax regime. Otherwise, he will be in the normal tax regime. From last year, the law is changed. If you want, choose normal tax regime. If you are not choosing, or if you are silent, you fall under new tax regime. That's why it is known as default tax regime. By default, you fall under this. If you want, you need to exercise the option of normal tax regime. If you are silent, you will fall under new tax regime. Okay. If assessee prefers normal tax, then the same should be chosen by him. Otherwise, he will fall under new tax regime. Nothing but lot of benefits, deduction should be foregone, but the tax rates are going to be friendly for the assessee. Okay. Now I am not making you write. Now we can take up in the material. When we go to the respective chapters, we will write it. What are all the tax rate? Now you have to understand the normal tax regime that is there in the Finance Act. Normal tax is mentioned in the Finance Act, whereas new tax regime is mentioned in the Income Tax Act. Okay, under 115 BAA to BAE now. Okay, as of now, firms and LLPs does not have a new tax regime. As of now, firms and LLPs do not have a new tax regime, my dear friends. The normal tax regime, whatever is said in the Finance Act for the individuals, gives us a basic exemption limit of 2,50,000. And if assessee is a senior citizen, if assessee is a resident senior citizen, 3 lakh. Resident super senior citizen who has completed 80 years of age, 5 lakhs. And the slab rates are 5%, 20%, 30%. For all of us to understand it in a simpler manner, up to 10 lakhs, here it will be 1,12,500. Here it will be 1,10,000, and here it will be 1 lakh. Up to 10 lakh of rupees, first 250 nil, next 250 5%, which comes to 12,500, and the balance 5 lakhs, okay, into 20%, 1 lakh, 1,12,500, 1,10,000, 1 lakh. Okay, and more than 10 lakh, it is 30%. It is 30%. Am I clear to you? Okay. In our notebook, okay, because this is an amendment, we'll start from here. In our notebook, rates of taxation under 115 BAC. Rates of taxation under 115 BAC. 115 BAC is now, my dear friends, applicable for individuals, HUF, AOP, BOI, artificial juristic person, all these people. And for companies, 115 BAA and BAB, okay, that we will see. First, we will see for these people, level of income, rate, amount, cumulative. Have this as column. Previously, this was very simpler to explain. First, it was every 250, 5% increase. First 250 nil. Next 250, 5%. That makes it 5 lakhs. Next 250, 10%. That makes it 7,50,000. Next 250, 15%. Next 250, 20%. Next 250, 25%, and then 30%. Last year, they changed it to 3 lakhs. Every 3 lakhs. 0 to 3, nil. 3 to 6, 5%. 6 to 9, 10%. 9 to 12, 15%. 15 to, 12 to 15, 20%. After that, it was 30%. There was no 25% bracket. That was removed. This year, that rhythm was also removed. Okay. 250, 250 was there. 3 was there. Now they have removed. Up to rupees 3 lakhs. Nil, my dear friends. 3 lakh to 7 lakhs. 5%, which means 4 lakhs into 5% is 20,000. 7 lakh to 10 lakhs. 10%, which means 3 lakhs into 10%. 10 lakh to 12 lakhs. 15%, which means 2 lakh into 15%. 12 lakh to 15 lakhs. So up to 15 lakhs, the tax is going to be 1,40,000. Up to 15 lakhs. If somebody says 20 lakhs is their income, you can take 5 lakh into 30% plus 1,40,000. Plus 1,40,000 will be their taxation. Okay. Last year it was 1,50,000. They changed the slab. Last year it was 3 to 6, 6 to 9, 9 to 12. This year they changed the slab by which another 10,000 benefit. How does the finance minister say that 17,500 is the benefit? Now they get 10,000 here. Standard deduction is increased from 50,000 to 75,000. So there, that 25,000 into 30%, 7,500. That's why the finance minister keeps on saying that there is a 7,500 rupees, 17,500 rupees extra benefit that is available to the assessees under the budget 2024. Okay, so these are all the slab rates of new tax regime. Remember, this is an amendment and more questions can always be in amendment. And also, it is my very firm belief that the old tax regime or the normal tax regime is under ventilator. And anytime the plug is going to be pulled off. The finance minister has promised the new income tax bill, okay, which will be introduced next year. By that time, I think the normal tax regime will go off. Okay, it is already in the ventilator. Anytime the plug will be pulled, so that we will only have new. CA Institute is very clear about some things, or rather any professional course is very clear about. They will not ask question on a provision which has been removed or a provision which is being stagnant. They will always question us in dynamic provisions. Why I am saying is the questions are more from new tax regime only and not going to be from the erstwhile or the normal tax regime. Have this in mind, though we will work both, but have this in your mind. Am I clear to you? Okay, this is about the rates of taxation. But if you honestly ask me whether rates of taxation is difficult to remember, you will understand the answer only if you do surcharge. Okay, the most difficult to remember is surcharge. That makes rates of taxation easy to remember. Okay, surcharge applicable for individuals. When I say individuals, I mean HUF, AOP, BOI, all those things. Okay. 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 Where the total income does not exceed rupees 50 lakhs, surcharge is nil. Where the total income does not exceed rupees 50 lakhs, surcharge is nil. But less than 1 crore, but does not exceed. Where the total income exceeds 50 lakhs, but does not exceed 1 crore, surcharge is 10%. Up to this, it is manageable. From here, there is a small element of coexistence of surcharge. Slowly, where total income other than, which means excluding, other than dividend, STCG on which STT is paid, that is section 111A, LTCG, both section 112 and 112A, both section 112 and 112A. Remember, where total income other than dividend, STCG on which STT is paid, LTCG, exceeds 2 crores but not 5 crores. But not 5 crores. On such total income, on such total income, on such means on the total income other than these three things, on such total income 25%, on dividend 111A and 112, sorry, 112 and 112A, 15% will continue. 15% will continue. Is the class clear? On such a total income, it will be 25%. Of course, on the tax portion only, I will compute the surcharge. And on these incomes, that is dividend, STCG on which STT is paid, LTCG on which STT is paid, and general LT. I'll come to those rates. First, I am just making you write the surcharge. Special rates, I want you to understand from the material very, very slowly, because chapter wise we will understand that. 15%. Is the class understanding? Are you all understanding this? Okay. Next is the same statement exceeds 5 crores. 37%. Same statement exceeds 5 crores, 37%. Okay. Okay. And then they gave this particular benefit. However, where assessee is under concessional tax regime, the maximum surcharge will only be 25%, which means this 37% bracket is only for old tax regime. If you are following the new tax regime, where it exceeds 2 crores, it can only be 25%. There is no 37% bracket. There is no 37% bracket. Are you understanding? Okay. This means, okay, for assessees under new tax regime, maximum surcharge will be 25%, even if income exceeds 5 crores. Is the class clear? Are you understanding? Is the class clear? Okay. So the maximum surcharge will only be 25%. Okay. Now friends, this is where we are going to go slow. As I told you, I will ensure chapter wise you understand this, especially capital gains, you understand it very clearly. But now I am going to tell you what is the special rates of taxes under the law. For that, I require you to go to page number 16. For that, I require you to go to page number 16. Special rates of taxation. And you are all aware that the budget was read on 23rd of February, so 23rd of July. So the special rates of taxation before and after needs to be understood. Section 111A. This is for security transaction tax paid. Whenever you are paying security transaction tax, which also goes to the union government, they ensure that the normal tax rates are lesser than what you would have otherwise paid. Okay, STCG on shares and securities on which STT is paid till 23rd July it is 15%. From till 22nd July it is 15%. From 23rd July it is 20%. Previously only one rate 15. Now it is increased to 20%. Now LTCG also has the same. LTCG on which STT is paid. On which STT is paid. First 1,25,000 is not taxable. Previously it was first 1 lakh which is not taxable. Now it is first 1,25,000 not taxable. More than that, if it is before on or before 22nd July, 10%. After that, it is 12.5%. After that, that is from 23rd July, it is 12.5%. Is the class following? Okay. Is the class following? Repeating. 111A. Up to 22nd July, 15%. After that, 20%. 112A. Up to 22nd July, 1 lakh is the threshold, 125. So take it as 125. Rate is 10%, 12.5%. Now all LTCGs are 12.5. All LTCGs are 12.5. Okay. Now, what happened to section 112? Okay. What happened is sheer confusion happened. Okay. Right. Give me some time to explain you. Section 112, which is long-term capital gain rate. Okay, which is long-term capital gain rate. Okay. Okay, up to 22nd July and from 23rd July. Okay, give me some time to explain you. Here it was 20% indexation can be claimed. Indexation can be availed and the rate of taxation is okay from 23rd July 12.5%, no indexation. This was read in the budget. But then, when the Finance Act was passed, there were some changes. And that is where the rate gets little complicated. Now, this 23rd July has to be split into two. Whether it is for land and building. Now, for land and building, assessee has two options. Land and building purchased, individuals and HUF alone. Land and building is purchased before 22nd July, but it is sold afterwards. Avail index and pay 20%. Don't avail index, pay 12.5%. This is only for immovable property, only for individuals and HUF. Section 112 is amended in such a manner, you avail the indexation, pay 20%, or don't avail the indexation, option is yours. For all other assets, it is 12.5%. It is 12.5%. For all other assets, for all other people. A company sells land and building. They don't have the option of indexation, 12.5% only. This option is given only for individuals and HUF who have purchased their immovable property before this change and selling it after this change. So what happens? Indexation needs to be also studied. And this is a tax planning mechanism. This is the biggest tax planning mechanism that will be available. We need to work out and see. In my opinion, if it is more than 10 years, if you are holding it, 12.5% is beneficial. Unless you sell it at a loss. Land will not be sold at a loss, but building can ensure losses. That's why it is still being maintained. Okay, okay, my dear friends. Okay, so if you're taking it down, I'll wait. Otherwise, it is here. Okay, LTCG on immovable property up to 22nd July, it is 20%. LTCG on immovable property sold by an individual or HUF on or about after 23rd, where he does not avail the indexation facility, 12.5%. Where he avails the indexation facility, then it is 20%. Then it is 20%. Any other LTCG, 20%, 12.5%. When I say any other, jewelry, work of art, architecture, painting, unlisted shares, everything 20%, 12.5%. For non-individuals and HUF, for a firm, company, cooperative society, everybody, if they sell the asset after 23rd July, even if it is immovable property, no indexation, only 12.5%. No indexation, only 12.5%. Is the class clear? Is the class understanding? Okay. Winnings are 30% and unexplained money winnings, all type of winnings are 30%. Okay. Please look through the rates once. Special rates once. Friends online, Mona, others, are you all following? Am I clear about the rates? Am I clear about the rates, my dear friends? Okay. Am I clear about the rates? The date of looking into, please remember 22nd July. And surcharge, as I told you, for individuals and HUF, and we all know HEC is 4%. Okay. My focus today is individuals. Just to our syllabus does not now include salaries, house property and all, though house property will be keeping on working. Okay. But there can be other type of questions for individuals also, but individual rates of taxation is very important to understand. Very important to understand. Okay. Let me put the first two questions. Later I will take it up. Later I will take it up. Let me start from the third question. Let me start from the third question, our practical. I will take up first and second questions. It's a question about rebate, which is rarest. Okay. I'm not going deeper into it. I'm starting from the third question where it can be interesting. STCG under 111A, LTCG on sale of jewelry under section 112 in August, which means after July. Business income 40 lakhs. Let us take STCG as before July. Let us take STCG as before July, and LTCG is after July, and business income is 40 lakhs. Compute tax only under normal tax regime. Only under normal tax regime. At that time, 15% is the rate. My dear friends, how to compute for 40 lakhs? Please understand this minus 10 lakhs into 30%, which means 30 lakhs into 30% plus 1 lakh 12,500. Up to 10 lakhs, it is 1 lakh 12,500. Up to 10 lakhs, it is 1 lakh 12,500. Beyond 10 lakhs, it is 30%. So 30 lakhs into 30% plus 1,12,500. The income has exceeded 50 lakhs. The income has exceeded, my dear friends, the income has exceeded 50 lakhs. So, add surcharge at the rate of 10%. Is the class following? Are you understanding, my dear friends? Shall we move on? Okay. Question number 4. Compute tax both under normal and under the new tax regime. Dividend income 26 lakhs, business income 2 crore 40 lakhs. Very interesting, very important to understand from the grassroots, because dividend is a unique type of income. Dividend is a unique type of income. Why I am saying it is a unique type of income? It is taxable at a normal rate, but surcharge is special. It is, dividend does not have, we saw special rates. Nowhere we said dividend is taxable at a special. 111A taxable at special rate. 112 taxable at special rate. 112A taxable at special rate. Dividend is not taxable at a special rate. It is taxable at a normal rate. But since the income has exceeded 2 crores, surcharge for dividend is only 15%, whereas for business income, it is 25%. How to do that? That's why this question gets interesting. Total income is 2 crore 66 lakhs. Total income is 2 crore 66 lakhs. Please understand, 2 crore 56 lakhs into 30%. plus 1,12,500. Total income 2 crore 66 lakhs. 2 crore 56 lakhs into 30% plus 1,12,500 plus 1,12,500. So I am getting 77 lakh 92,500. 77 lakh 92,500. Is the class following? Okay, right. Add surcharge, add surcharge, please understand, on dividend at 15%. Sorry, at 15%. Okay, on dividend at 15%. How to find out? My dear friends, 77 lakh 92,500 is for 26 lakhs. 2 crore 66 lakhs. What is for 26 lakhs? Repeating, for 2 crore 66 lakhs, it is 77 92 500. Proportionately, we find out. Proportionately, we find out 77 lakh 92,500 divided by 2 crore 66 lakhs into 26 lakhs. Repeating, this divided by this into this gives me 7. On this 15%, on this 15%, on the balance at 25%, since income has exceeded 2 crores without considering dividend income. So this minus this into 25%. Please work out and see in your calculators also, just to get the feel, because you also for being doing it in a software. Now doing it back in the classroom or the examination will be by calculators. Please work out and see. Is this clear to you? Any doubts in this? Okay, whenever dividend income is there, be cautious. Whenever dividend income is there, be cautious. Work out separately for dividend income by taking the, because it is taxable at normal rate, but having a different level of surcharge where other income exceeds 2 crores. Question number, so I need to do default tax regime. In concessional tax regime, the change is here minus 15 lakhs, okay, and plus 1,40,000. Okay, we all know that up to 15 lakhs, we just worked out and saw the cumulative tax comes to 1,40,000. More than 15 lakhs. So 266 minus 15, 2 crore 51 lakhs into 30% plus 1,40,000 plus 1,40,000. Accordingly, the surcharge and HEC will change. May I, friends? Question number 5. STCG under 111A, 24 lakhs, out of which 8 lakhs is before July 22 and the balance 16 lakhs is after that. LTCG wholly in the second half 25 lakhs. Business income 3 lakhs. for this 3 crores, 2 crore 90 lakhs into 30% plus 1 lakh 12,500. Up to 10 lakhs, 1 lakh 12,500. So 2 crore 90 lakhs into 30% plus 112,500. Surcharge 15% on income taxable under 111A and 112A. My dear friends, these three into 15%, 25% on business income. Is the class following? Are you understanding this? Are you understanding how to compute this? Okay, my dear friends, you need not write it separately. Just I will work out. You can just write the final answer or only the business answer of it. If it is optional, that is, if it is new tax regime. Here, all other things the same. Here it will be 15 lakhs. And here it will be 1,40,000. just write business tax alone and surcharge on business tax, total tax. Is this clear? LTCG under section 112 on sale of land in June, so 20%. LTCG under 112A, I assume that it is after July. So 55 lakhs minus 1,25,000 into the rate. And here comes the interesting thing, business income. If the assessee is following the normal slab system, for this the surcharge will be 37%. But if the assessee is following the default tax system, that is the new tax regime, the surcharge will only be 25%. Whatever may be the income, the maximum surcharge cannot exceed 25% under the new tax regime. Okay. My dear friends, since it is before June, we are going to tax it at 20%. Since this is after July 23rd, it is taxable at 12.5%. Here it is direct minus 10 lakhs. So 5 crore 90 lakhs into 30% plus 1,12,500. 5 crore 90 lakhs into 30% plus 1,12,500. This is the most unacceptable part of law. A person who earns 6.9 crores will pay almost 42% as tax. Almost 42%. %40 as tax, which is very high. Friends, whereas if the same is under default tax regime, just take the answer alone. The two things are here it will be 15 lakhs and 1,40,000, and here it will only be 25%. So you can see that the difference is almost 30 lakhs. Whatever exemption, whatever deductions you claim, whatever things you pay, the difference is 30 lakhs. So indirectly, you are pushing everyone to follow the concessional tax regime. Am I clear to you? Am I clear to you all? Okay. We end it here today. We will meet day after tomorrow, Wednesday morning, to continue with understanding of tax computation. That will be over in 1.5 or 2 hours. After that, we start understanding PGBP. Meet you on Wednesday morning to continue, friends. All the best. Namaste. Good morning. My dear friends, we start with wherever we left in the last class. It's not clear. We start with wherever we left in the last class about rates of taxation. Okay, as I told you, we will go chapter wise and see them also, but on an overall basis, we are understanding the rates of taxation. In this manner, I want you to, again, in capital gains, we will have a very detailed discussion on this particular aspect of indexation. But at this level, I am just giving you a bird's eye view of what happened with regard to indexation. Section 48 of our capital gains chapter speaks about mode of computing capital gains, okay, in which they have said a long-term capital gain can have the benefit of indexation, in which they have said a long-term capital gain can have the benefit of indexation. This is said in section 48. The LTCG benefit of indexation is given in section 48, and section 112 talks about the rates of taxation. What I told you about this section? Okay, it is a charging section where the rate is inherent in a section. It is known as a charging section. It is known as a charging section. So once more I am repeating, section 48 is the section which speaks about mode of computing, which talks about the LTCG benefit of indexation. Section 112 is the section which speaks about the rates of taxation, that it is taxable at 20%. This is taken out from 23rd July. This is taken out from 23rd July. What does this apply? This means henceforth long-term capital gain cannot have the benefit of indexation. This technically means henceforth long-term capital asset cannot have the benefit of indexation. Is the class clear? Okay. And the rate of taxation becomes 12.5%. Let's again go slow. The benefit of indexation is removed and the rate of taxation becomes 12.5%. Rates of taxation becomes 12.5%. Then this was at the time of bill. Then when after the industry reacted, after the people reacted, the finance minister came up with section 112 like this. Section 112 is like this. Okay, up to 22nd July. Okay, I'm only talking about in the section 112, which means long-term capital gain. Index benefit is available. Rate is 20%. On and from July 23. Okay. Index benefit is gone. Index benefit is gone. Rate is 12.5%. And since the industry reacted for one particular asset, land and building, for one particular category of assessee, individuals and HUF. Once more I am repeating, if the asset is land and building and the seller is an individual or HUF, if he has purchased the asset before 23rd July, and selling it after he is given an option. Either you can go for 20% or he can go for 12.5%. Either he can go for 20% with indexation or he can prefer 12.5% without indexation. Is the class understanding? Is the class understanding? Now, I want you to again be clear how the option is given in the law. How the option is given in the law. Okay, look at the wordings of the law. You will be really understanding how the law has looked at it. Look at the wordings the law uses. Okay, hope it's visible. Okay, amendment to section 112. This is Finance Act, that is passed in the Parliament. In the case of an individual or a HUF, resident individual, the amount of income tax is 20% before 23rd July, that is up to 22nd. On or after, it is 12.5%. And then they said, okay, provided further that in the case of a long-term capital asset, what type of long-term capital asset? Being land or building. Jewelry does not have that option. Unlisted shares does not have that option. Any other asset does not have the option. You have to mandatorily go to 12.5%. Company, firm, they don't have that option. They have to go for 12.5%. Only for individuals and HUF. Provided further, in the case of long-term capital asset being land or building or both, which is acquired before 23rd, okay, where the income tax is computed under B. What is B? 12.5%. What is B is 12.5%. Exceeds the amount, that is 12.5%. If I compute, it exceeds the income tax computed in accordance with the provision as they stood immediately before this amendment, then such excess shall be ignored. Excellent words. Suppose by computing 12.5%, you get a tax of, let us take 40,000. I'm just taking a, and by computing 20%, you are only getting 32,500. Ignore that 7,500. Ignore that 7,500. I am reading the law again. Provided further. So, A is 20% up to 22nd July. B is 12.5% on and from 23rd July. Provided further, in the case of transfer of a long-term capital asset, which is nothing but land and building, which is acquired before this date, where the income tax computed as 12.5% exceeds the income tax computed in accordance with as they stood immediately before this amendment, which is 20% along with indexation benefit, then such excess shall be ignored. Is the class understanding? Oh, very, very, very important thing to understand. The law has not said this in section 48. The law has said this in section 112. So now, while computing income, I cannot take the benefit of indexation. While computing tax only, I need to take this benefit. Repeating, friends, very, very careful understanding. Though, as I said in LT, when I come to capital gain chapter, I will repeat little elaborately. But very interesting amendment. They did not bring back indexation in 48. They brought back indexation in 112. That is the charging section, which means at the time of computing, working out total income, you cannot give the benefit of indexation. At the time of computing tax, you might get the benefit of, you might check whether benefit of indexation is better or not. Is the class following? Are you all following? Okay, right? That is how it has been designed. That is how it has been set. Okay, okay. So section 48 was not amended. Section 48 amendment was not reversed. It still holds good, no benefit of indexation. But in section 112, they said they did not even use, though in the classroom I used the easy words of they can choose, because we always choose whichever is less. The law is furthermore clear. By computing under the erstwhile method, if your tax is more than the current tax, that excess alone you ignore it, which means you will choose the if your tax is lesser than the current tax, that excess alone, remove it, because you will always choose the old tax regime. Is the class clear? Is the class clear? I just want to work out and show you how it happens. One. I'm there in question number 7. Compute under normal and default tax regime. Sale value of land purchased before 1/4/2001. Fair market value. LTCG under 112A. Business income is 6 crores. Assume that the land is sold in December. The value of index is 100 and the year of transfer is 363. Remember, we are working only for individuals. First 10 questions, I'm working only for individuals. Okay, I will assume this to be after July. Okay, don't worry, in examination, it will be clear. Now I am assuming it to be after July. Less cost of acquisition. Here, no question of indexation. Here, no question of indexation. Is our friends clear? Okay, we cannot work out indexation if the asset is sold while computing total income. I will not do the benefit of indexation. Shall I? Is the class understanding? So, my dear friends, henceforth the computation is going to be as simple as this for capital gains. As simple as this. There is no ambiguity at all. Computation wise, it is going to be, if it is sold on or after 23rd July, straight away reduce the, if at all cost of transfer is there, that and the indexed, cost of acquisition. Okay. Now, while computing tax only, we need to be little cautious. Okay. Now, for capital gains alone, in this question, I am separately working for capital gains alone. Computation of capital gains tax. Okay. Base tax at 12.5% slash 20%. This into 12.5% or this into 20%. Are you all following? Are you all following? Okay. Tax after amendment is higher than tax before amendment. The law specifies where tax after amendment is higher, then such excess shall be ignored. In the given case, 16, 11, 250, 14, 68, 140. This difference, okay, will be ignored. I have written it as present and erstwhile. You can also write it as after amendment, before amendment, whatever words. Is the class clear? Do you understand this? Okay. So this is what this wordings and the impact is provided further. That in the case of transfer of LTCA, which is land and building, and they are only now speaking about individuals and HUF. Okay. Which is acquired which is acquired before 23rd July, where income tax computed at 12.5% exceeds income tax computed at 20%, then such excess shall be ignored. Whereas it is, if you look at companies and all, there is no that words of provided. Companies or any other non-resident estates, those they don't use the word. Only for individuals and HUF, this benefit is given. Is the class clear? Okay, okay, right. As I told you, even though we will work out one or two questions here, but the main focus will be in capital gains chapter as to how to work out. Okay. Now I'm going for computation of tax. Remember in this question, my total income other than capital gains, has exceeded 5 crores. Has exceeded 5 crores. If I go under the normal tax regime or the old tax regime, my surcharge is 37%. If I go under the default tax regime, my surcharge will be 25%. Go ahead and do it. Go ahead and do it. Remember, for that 55 lakh, we need to give 1,25,000, and then only the balance is only taxable. The balance is only taxable. Go ahead and do it. I'll also. Is this what you are also getting? Under the normal system, I get this, we know 1468 140. Otherwise, the last answer's copy. Otherwise, the last answer's answer itself. Okay. 671 875, 1 crore 78. And for the first two, it is 15%. For the business income tax, it is 37%. Only the LTCG changes, that is LTCG under 112 changes. Otherwise, the same answer holds good. Can I move on? Can I move on? Okay. Okay. Question number 8. Compute under normal and default. STCG under section 111A, 50% before July and 50% after that. LTCG also 50-50, dividend income and business income. This question gets importance. Two reasons I want to tell you. Up to 125 not taxable. After that, divide 50-50. Don't divide 25 lakhs, 25 lakhs, minus 1 lakh, minus 125. You will give 225 as deduction then. You will give 225 as deduction. Please divide it as 50-50. Please reduce 125 and then divide it as 50-50. And remember, there is dividend income. Dividend income has this unique quality of the tax is at normal rate, but surcharge is at special rate. Surcharge is at special rate. Is the class clear? Are you understanding? Okay. Those in online, are you understanding? Just write the final answer alone, that's sufficient. Shall I? Shall I? STCG on sale of land, LTCG under 112A, dividend income and business income. Okay, you all know that STCG on sale of land is taxable at normal rates. It is not having any special rate. It's not coming under 111A. It is not coming under 111A is only for STCG on sale of listed shares and securities on which STT is paid both at the time of purchase and at the time of transfer. This is not 111A. Remember, it is taxable at normal rate. LTCG alone taxable at special rate. And there is a dividend income which is taxable at normal rate, but surcharge is special. We will only work out default tax regime. We will only work out default tax regime. Try it out. Only default tax regime, please. Say your answer. Any answers? Getting it? This is what I'm getting. Okay. So remember, STCG is taxable at the normal rate, and normal tax regime. Just have the answer written somewhere. 221, 229, 81, 607. Of course, you can round off to the nearest 10. Okay. I'm going into one of the interesting questions with this week. Just close the taxation, rate of taxation now, and then continue in the chapters. Okay. Uh, Apart from that, I'll do companies also. Mr. Saket provides you the following details of sale of asset. He does not have any other income. As compute tax assuming he is falling under concessional tax regime. Land where he can exercise the option. He has purchased before July 23rd and sold after July 23rd, so he can exercise the option. Jewelry, he does not have the option. I need not look into the indexation at all. He does not have the option at all, so I need not look into indexation. Listed shares, he has sold it in June 24. He has sold it in June 24. Anyhow, the indexation benefit is not there. Unlisted shares, he has sold it in June 24. Indexation can be claimed. Indexation can be claimed. Okay. So I have taken 4 different assets. Again, I will work out a similar question when we are doing capital gains. Now, only from the taxation perspective, how does this work? Okay, read the question once. So this, am I clear? Now technically looking at it, this is taxable at 10%. This is taxable at 20%. This is taxable at 12.5%. For that first land alone, I need to just ensure that the tax under the current regime is not more than the tax under the erstwhile regime, that is without indexation. So I am doing the next table. Is the class clear? Shall we move on? Okay. STCG taxable at slab rates. Is there a STCG taxable at slab rates? No, right? Sorry. What are all the income there? LTCG, there is no STCG taxable at slab rates. LTCG taxable under 112A. LTCG taxable under 112 is all the three, 44 plus 6 plus 559. So I round off. I assure you that you are understanding only the grassroots level. When we do capital gains, when we again do it, you will become more simple. I'm just giving you a small training on capital gains tax and that rates of tax amendment. I will do it again in capital gains and in assessment of individuals, these workings, so that your grip over the whole rates of taxation is very strong. Okay, because obviously in office that software calculates everything, so you will not be doing it practically. At least in classroom, let's try now. Okay, now there will be a small confusion. I want to straight away address that confusion about 112A. 112A is 10% for arising before 23rd July. I'm directly reading from the Act. This is A. 12.5% after on or after 23rd July. B. Correct? Are you understanding this? But this 1,25,000 is for both A and B, which means it is amended from 1st April. You need not, oh, it is before 23rd July. I should only give 1 lakh and not 1,25,000. Don't have such confusion. Look at this. Provided the limit of 1,25,000 shall apply on aggregate on the long-term capital gain under both A and B, which means that 1,25,000 is from 1st April 25 itself, 1st April 24 itself. When they look into the Finance Act, you will read the word 1st April 25 because they always speak as per assessment year. For us, we should understand that 1,25,000 is now available from 1st April 24 itself. You need not worry. Okay, so now, and additionally, I'm saying something again. I assure you that when we do the capital gains, I will again speak about it. Okay, in this question, you will understand the word. He does not have any other income. He does not have any other income, which means he can claim that basic exemption limit from the capital gains. An assessee is not taxable up to 3 lakhs rupees. He is under the concessional tax regime. Up to 3 lakhs, you cannot tax him. Up to 3 lakhs, you cannot tax him. So please understand, okay, this entire amount will go untaxed. This entire amount will go untaxed. Why? First 1,25,000 not taxable, another 3 lakhs not taxable. another 3 lakhs not taxable. From here also, from this also, I can deduct 25,000. The balance will be taxable at specific rates. Balance will be taxable at specific rate. Okay, I want you to again understand that basic exemption limit, if I don't have any other income, the law gives me the benefit of adjusting by basic exemption limit against my capital gains. That adjustment is not possible against winnings. That adjustment is possible against capital gains. Am I clear to you? Okay, at this level we will stop here. Okay, when we do capital gains, I will explain you more, because always you will have a doubt. Can I adjust that basic exemption limit directly from 112 instead of one? The law will go section wise. Okay, first adjust it with 112A or 111A, and then only they will make you adjust it against 212. As of now, forget it. When we do capital gains chapter, I will work out and show you how the basic exemption deficit has to be worked out. As of now, this question, if you have understood up to this level, it is sufficient. Remaining, we will understand it in the capital gains chapter. So that at that time, I'll come back to the same place and work out. So that if you understand capital gains, the grip will be more and the taxation will be more. I feel that our MCQs is going to be flooded with these types of questions. Is the class clear? Is the class clear? Okay, right. Friends, that is about the taxation for individual, tax rates for individuals, HUF, AOP, BOI, all these things. Okay. And then I go back to our theory material. Okay. I go back to our theory material. Somewhere I lead you to page number 14. Okay. AOP BOI is slab system of taxation. Page number 15. LLPs and firms, tax rate is 30%. LLPs and firms, tax rate is 30%. In our theory material, you can see. Okay, tax rate is 30%. Interestingly, LLPs and firms does not have a new or concessional tax regime. They don't have a new or concessional tax regime, so it is falling under 30%. Cooperative societies. First 10,000, 10%. Next 10,000, 20%. So here it will be 1,000. Here it will be 2,000. So 3,000 rupees. On the amount exceeding 20,000, 30%. On the amount exceeding 20,000, 30%. Otherwise, they can opt for 115 BAD, which is 22%. BAE manufacturing 15%. I'll explain this again now when I go to companies. Companies and cooperative has the same rate. Now I go for companies. I made a mistake here. I want you to, this is only 21-22. It is not 22-23. It is 21-22. Where the turnover or gross receipts for the financial year 21-22 has not exceeded 400 crores, 25%. Any other case, 30%. Any other case, 30%. Friends, 115 BAA for concessional tax regime for companies, new tax regime for companies. BAB is for manufacturing companies. BAB is for manufacturing companies. Income from manufacturing operations 15%. Income other than manufacturing operations 22%. Suppose a manufacturing company has dividend income, has income from house property, has interest income, that is taxable only at 22%. But if they have core manufacturing income, sale, raw material converted into finished goods, which is sold, on that the profit they earn, that is only 15%. Now, for the most important thing, that's what I have written in cooperative society also the same. It should have commenced operation on or before 31st March 24. Amendment was not made by our finance minister to extend it to 31st March 25. Amendment was not made. So, any manufacturing company, please understand, any manufacturing company, though I have written it elaborately in company assessment, 1/10/2019 to 31/3/24. 1/10/2019 to 31/3/24, if they have commenced operation, the rate of taxes is 15%. Suppose they have commenced the operation after 31/3, that is during the current year, they will only have 115 BAA, not 115 BAB. Not 115 BAB. Again repeating, normally the year will be adjusted in the Finance Act or the Finance Bill budget when it is getting passed. This time, the 31/3/24 has not been made as 31/3/25, which means if I commence a manufacturing company during the current year, my manufacturing income, my all other incomes are taxable at a concessional rate of 22% and not that 15%. Not that 15. That is over with 31/3/24. At least for companies, we had it for a period of 4.5 years. For cooperatives, we have it for a period of only 1 year. They introduced 115 BAE only last year, and they have not extended the date, which means if you have commenced it in the last year, your rate of taxation on manufacturing income is 15%. If you commence it this year, your rate of taxation is 22%. Okay. Okay. Please write it in your material and keep it. Though in the assessment of companies, I have written it. Okay. Business income from manufacturing operation commenced from commenced after 1/10/19 before 31/3/24. Yeah, tell me, sir. Raja. To 1/10/2019. That is also an election year. They came to after election only, they presented the budget as like this year, 23rd July 24. That time also after election only they presented the budget. That's why it is 1/10/19. May I? May I? Okay. Now, the normal rate of taxation is 25 or 30%. Here it is 22/15. Foreign companies, there is an amendment 35%. Now it has been reduced from 40 to 35. Okay. And the surcharge table is here in the last page. The surcharge table is here in the last page of your handout. Okay. Surcharge. Okay. Where they are opting for normal regime of taxation, 7% and 12% up to 1 crore nil. Otherwise 7% or 12%, both for cooperatives. Where they are operating under the new taxation regime, 10% is the surcharge everywhere. 10% is the surcharge everywhere. Read through the surcharge table. May I? May I, friends? Shall I? Okay. I am looking at question number 11. I am looking at question number 11. The turnover of a domestic company is as follows. I want the turnover of financial year 21-22, which has exceeded 400 crores. Repeating, I made a mistake here. I hope you have corrected it. Okay. Total turnover or gross receipt of the company for the financial year 21-22 does not exceed 25. Otherwise, it is 30%. In this case, it has exceeded for the financial year 21-22, it has exceeded 400 crores. It has exceeded 400 crores. So my tax rate will be 30%. Normal tax rate will be 30%. The business profit computed under income tax law is 6 crores. Compute the tax payable. Tax at the rate of 30% since the turnover of financial year 21-22 has exceeded 400 crores. So income is 6 crores. at the rate of 7% in the case of normal, as income exceeds 1 crore but not 10 crores, 10% in the case of concession. No? 6 crores only, no? Income. Profit is 6 crores. A cooperative society has a taxable income of 14,10,000, assuming its main object is manufacturing and the income is earned from manufacturing operations. I will also go under an assumption that it commenced its operation in the financial year 23-24. I will also go under the assumption that it commenced its operation in the financial year 23-24. Income is 14,10,000. Friends, slab rate of tax 14,10,000 minus 20,000 into 30% plus 3,000. You all agree? You all understand? The slab rates of taxes for a cooperative society works out like this. I again and again assure you so that you are not getting jittery. I will do it while doing assessment of cooperative. We'll again do it. Okay. The slab rates, income exceeding 20,000 30%. Up to 20,000, it is 3,000, which means 13,90,000 into 30% plus 3,000. You all agree with me? Oh, oh, sorry. Shall I? Shall I? Okay. A manufacturing company incorporated in 2023, which is already in the concessional tax regime, gives you the following. Income from manufacturing operations, that is taxable at 15%. Income from other sources, that is taxable at 22%. LTCG on sale of land in October 40 lakhs. If we apply indexation, that benefit is not available for companies. Only individuals and HUF can have the benefit of computing under, if the erstwhile regime is better, you can ignore all these things. That is, so this detail is irrelevant for a company. LTCG is taxable at 12.5%. Is this clear? Is this clear? The last question is, if the above manufacturing, 14th question is in October 24, then I told you 115 BAB is over with 31st of March 24. If you have incorporated, there is no 115 BAB, it is only 115 BAA. Okay, this is, sir. Oh, sorry, sir. ஒரே நிமிஷம் மாத்தினேன் சார். Shall I? Shall I, friends? Okay. Last question. A firm has a total income of 1 crore. Firm does not have any other regime. 30% is the rate of tax. Since the income has exceeded 1 crore, 12% is the surcharge. LTCG on sale of land in November, 12.5%. Even if they have given indexation, we should not compare and see. And STCG of business trust in March, 20%. Firm surcharge is 12%, friends. This is with regard to rates of taxes. As I am telling you, I am just giving you a bird's eye view. You might have been comfortable with this itself, but we have a lot more to do when we do the respective assessment of firm, assessment of company, assessment of individuals, capital gains as a standalone chapter. We will again and again see how this needs to be worked out. Okay, which includes so this includes, so this is only 50 lakhs. But anyhow, surcharge is 12%.